All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Today, market's up pretty good here today. Up about, 85 points, somewhere in that area here on the SPY. 84 points right now, right up back to the 20-day moving average. This is the first return to the 20-day moving average in quite some time. And, it's pushing on up there, especially after yesterday. All the negative catalyst, then today, all the positive catalyst, and it has been a ping pong affair, but a little bit of a new short term high being set right here, and we are definitely seeing some panic buying coming into the market. There definitely is some of that element. But mostly we're looking at bargain hunting, value buying here, where things are at. But even some of the stuff that had some negative analyst commentary on it yesterday, like a Boeing, completely erasing that here today, as the market kind of starts to say, well, if there is trade resolution, this market's seriously undervalued, and that's kind of the point where the market is right now. And I do think the market got a little reprieve from the Fed here today. I don't think the Fed said anything too major. But when you get all three of them and you kind of get this just kind of chat where they portray a total sense of calm, it translates into the market, and that's what we saw from the Fed here today, from Powell here today. Just a total sense of calm, just kind of rational thought, rational thinking. World's not going to end, and it's something where they're accepting of what has happened, which has kind of been one of the market's issues. Is the Fed has not been as accepting of what has happened in the market's opinion, but the jobs number coming in the way it did this morning definitely gives the Fed a little bit of an upper hand over the market, here today, but overall, it's it is a day where everything's moving about the same. It's not a day of a lot of differentiation. Boeing's up 5%. Okay, great. Under Armour, it's up 5%. Nike, it's up 5%. 3%, not quite the same degree. But as we kind of go through things, American Express, it's up 5%. Visa up the same amount of percentage here. You go to UPS and it's up 3%, and FedEx and it's up 4%. But pretty much everything in the 3 to 4 to 5% area. But most stocks like CSX, right? They're kind of just back to where they were. Right, back to where they were. There are the other kind of class of stocks like an Under Armour or a Boeing, where the stock is breaking above the highs from earlier this week and late last week. So that's a nice nice thing to see, if you're involved in those names. But, perhaps the biggest story here today is the absolute obliteration of implied volatilities that's happening here today. Implied volatilities in individual stocks are getting wrecked. We've talked about how high they've been, and that we're going to have this period where they really have to come down. And, they are getting absolutely wrecked here today. And, you can see the VXX, also making a sharp move down, really kind of punching a big hole in those implied volatilities. But you can also see that we're nowhere near kind of low areas, right? They're still elevated, but they have, they've taken a huge hit here today. What will happen is that if the market, starts to go into a little bit more of a normal mode where, it's moving about 20 to 30 points a day, the implied volatilities will continue to drop. They will continue to drop. They will continue to drop aggressively, even though the market may not have a big update like today, right? Where we could see the VIX drop 15%, even though the market itself is, only up 20 points. And that's one of the things we tend to see after a big kind of bullish thrust here. Can you say the market's out of the woods right now? No, you can't, right? You can't. It's one of those where, look, if there's no trade war resolution Monday and Tuesday on these meetings, the market's going to throw up again. Right, it's going to, look at the data, look at the manufacturing, look at the earnings outlooks, and go, wait a minute. If there's no resolution here, things look ugly, right? And it's one of those where this market has this just really incredible valuation differential to where you can make a very good argument the market should be 25% higher than it is today if everything is solved between the U.S. and China, and you could make a pretty good argument it should be 10 to 15% lower from where it is today if, there's more to come in terms of the trade war. So it's a market that, you can look at and make a pretty fair argument for a 40% range, which I don't recall any kind of market where you could do that. Even in the financial crisis, you couldn't make that argument for short-term upside. You couldn't make that argument in the flash crash or any of the European debt crisis stuff. Couldn't make that argument, but it's where things are right now. And it's a very unique spot and a very, one where ultimately there will be a lot of opportunity. Ultimately, there'll be a lot of hindsight. As people try to go, well, why didn't I predict that news, right? Why didn't I predict that news? And let's keep in mind, news will drive oscillations. News doesn't drive the major trends. But in this scenario right here, we are talking about a piece of the global economic puzzle that is so big that it will be a major mover because it will move the economics and it will move the earnings. And, most news isn't that way, right? Most news isn't that way, but this one is, is quite substantial in that regard. Bottom line is we are going to continue to see implied volatilities contract, right? I mean, I bought some Under Armour earlier today. Stock's up 30 cents, since I got in. The option's not moving all that much. It's moving a little bit, but, not all that much. And it's one there where I need a secondary thrust, to really get it to move substantially my way. And it's one of those where, I did go a little bit. I didn't buy the at-the-money option. I went another strike into the money just because I wanted a little bit less of a Vega hit. But it's still happening, right? It's still absolutely happening out there. And those will, those differentials, they'll start to come down. We're starting to see them come down. And it'll make it to the point where, it's a lot more valuable to grab a 50-cent move on a stock like Under Armour than what it has been. And with some things out there, I mean, SPY options, you look and how much they move on a 20-point move in the market. They barely move, they barely budge. But we will see that. We'll see that revert a little bit here. Overall, it's a strong day for the market internals. We see the IWM outperforming. We see transports outperforming. Here today, which is positive. Utilities lagging, which is a positive. Consumer staples lagging a little bit, which is a positive here. You see things like the emerging market ETF up about 3%. China, the FXI, up about 3.6% here. I know there's a lot of talk out there, and I've seen it kind of come through some of the news feeds of, oh man, the bottom's in, and it's time for the market to rip higher and everything else, and it might be. It might be. That's not what the metrics suggest, and it's one of those where we'll ultimately see a higher low, but rarely do you get a sell-off like this where all of a sudden you just snap on back and there's only 1 or 2 days of selling there. Could we get all the way up here to 2,600 before some of that selling? Yeah, we could. That's to me, that's the risk factor. That's these lows are the lows we've talked about as far as the highs that the market could reach on a rebound rally here. But ultimately, look, it's a very bullish move here today. It's one that has the internals, has the catalyst. But let's face it, I know the magnitude is a little bit different. 70 points versus 60 points yesterday. But it's still one where there's very little price stability. It's still one where to say, hey, all clear with this magnitude of move, it's just not what we normally see. It's just not what we normally see. The all clears tend to come with smaller, more stable types of moves. So it still tells me we're in a bounce phase more than anything. And yes, that bounce phase could continue. And look, if the bounce phase continues up to 2,600, you're going to have a lot of people saying, oh, bottom's in and it's up from here. And we're going to get another big washout. Right? There'll be another big sell-off that will come into play at that time. So if you feel like, hey, I've missed out or something like that, or you've been a little heavy in cash in your retirement account or something like that, nothing wrong with that. There will be plenty of chances to put money to work if the bottom is in. And I don't think you can look at today and say, guaranteed bottom, absolutely in. Today is really the antithesis of yesterday in so many ways. And, when we wake up Monday morning, there will be a gap in the market. There will be news, and it will likely revolve around the rumors of what's going on with the U.S.-China trade talks. And, that can affect the markets for the next 80 points in either direction here. Now, for the challenge, I'm most likely going to hold Under Armour into the close. That's what I'm looking at here. It's one where I have some good reward potential on the upside with one more kind of thrust there. I have a little more downside risk that is built in here today with the implied volatility coming out of the option a little bit. But I'm going to take it and go. And, most likely take it and go here into the close. I'll make my final decision around the close and run from there. There's some content that I wanted to deliver here today, but as you might be able to tell a little bit of my voice and whatnot, I am a little bit under the weather here today. So I will hit the ground running here Monday with a lot of that content and next week, and really kind of ramp deliver some of the stuff that I'm excited to deliver and that I've prepared here over the last several weeks that I think is very important going into this year and with how this year shapes up. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.